The statement of cash flows is like the financial GPS for a company. It doesn't just tell you where a company's cash has been, but it helps stakeholder types predict where it might go next. Operating Activities section. This is where the company shows you the cash it's generating from its day-to-day business operations. Think of it as the company's bread and butter. It tells you if the primary activities of the business can actually keep the lights on. If you are looking for a sign of health, this is a pulse you should be checking. Revenue from selling products, payments to suppliers, salaries to employees, and cash received from customers. It's all here. When I open up a statement, this is the section I scan first, and for good reason. If a company can't generate cash through operations, it's like a car without an engine, not going far. Investing Activities section. Here we dive into the long-term health and expansion strategy of the business. Investing activities include purchases or sales of assets. Think property, plants, equipment, essentially the big-ticket items that aren't bought or sold every day. If a company in Portland, where I'm based, is selling off assets, it might be restructuring or freeing up cash. If it's buying up property or new tech, we're likely looking at expansion or upgrades. This section is intriguing because it's all about the strategic moves a company is making for future growth. You can't skate to where the puck is, you have to skate to where it's going to be. That's investing activities. Financing Activities section. Now we're talking about how the company funds its operations and growth. This could be through debt, equity, or dividend payments. Picture financing activities like a game of financial Tetris, where the company is trying to fit together equity, selling stock, debt, taking on loans, and dividends, sharing profits with shareholders, in the most efficient way possible. They may issue stock to raise cash or take out a loan if the terms are more favorable. Meanwhile, paying dividends may keep investors happy, but can slow down growth if cash is going out the door. This section is critical to understanding the financial relationships a company is willing to foster or fortify, like whether taking on more debt is worth the potential growth it could bring. Each of these sections comes together to form a detailed narrative. The statement of cash flows doesn't just show a company's liquidity, it provides insights into management's approach to balancing operations, investing, and financing to drive the business forward. Understanding this trifecta, you can peer through the numbers and into the mind of the company, its strategies, its fears, and where it might be barreling headfirst into the future.